Howdy, y'all. Welcome to Liberty Call. Today is Tuesday, November 21st, 2023. Hope everybody's having a fantastical day out there in the interwebs. It is a beautiful day here. The snow has receded and clear skies, and it's like 50, 60 degrees outside. It's beautiful. Anyways, hope you're having a good day. And if it is your first time watching Liberty Call, I'm glad you're here. If you could do me a favor, if you could give me some thumbs up, like, share, subscribe, follows, press the notification bell. And looks like the markets were not in a good mood, so let's go ahead and jump over there and see how they finished off for the day. The Dow Jones was down 0.18%, 62 points, closed at 35,088. S&P 500 was down 0.2%, closed at 4538. NASDAQ down 0.59%, closed at 14,199. The VIX looks like it's flat. It's currently at 1335. Canada was down 0.67. Brazil was down 0.26. And Mexico down 0.34. In Europe, let's see here. Germany was flat, down 0.01. The UK down 0.19. France down 0.24. The Netherlands down 0.12. Same with Spain. Italy down 1.32%. Switzerland up 0.39. And Portugal down 0.64. Russian exchanges both in the green today. The MOEX up 0.35. RTSI up 1.04%. And the overnights, the Nikkei in Japan was down 0.1%. Australia up 0.28. In China, the Shanghai was down 0.01. Shenzhen Component down 0.26. China A50 up 0.55. DJ Shanghai down 0.06. Hang Seng down 0.18. And the Taiwan weighted appears not to have been open. All right. So, like I said, not the happiest markets, but nothing down too terrible. Feels like we're kind of waiting for the next black swan to appear and kick us in the nuts. So we shall see what happens over the next couple of months. All right, let's go ahead and jump into the market recap. Dow wins lower as Fed minutes point to higher for longer rates. I know I normally go through the Fed minutes when they come out. I didn't have a chance to read through them yet so far today. So we'll spend a good part of tomorrow's Liberty Call going through the Fed minutes and the news of tomorrow. So I can't imagine there's going to be a whole lot the day before Thanksgiving. The news is pretty dry, kind of like your turkey. Ha ha! Woo! Dun dun. Anyways, all right, let's go ahead and get into the article. On Tuesday, the Dow closed lower as Federal Reserve minutes revealed support for maintaining higher interest rates for an extended period, emphasizing a cautious approach until clear signs of declining inflation emerge. While indicating a preference for steady rates rather than hikes, there were no indications of imminent rate cuts. Traders expect a potential first rate cut at the April 30th, May 1st meeting. I wouldn't hold my breath. Ford stock declined over 1% after the company detailed plans to reduce investment in its Michigan EV battery plant due to decreasing demand for electric vehicles. Yeah, because they're garbage. Zoom Video Communications reported Q3 results that exceeded analyst estimates, lifting its full-year guidance. However, concerns about ongoing macroeconomic headwinds affected the stock's performance. NVIDIA, a leading AI chipmaker, is set to announce earnings, and positive expectations are fueled by the overall strong earnings season. Retailers, Lowe's, Kohl's, and Best Buy traded lower as they warned of a potential slowdown in discretionary spending leading up to the crucial holiday season. In contrast, Abercrombie & Fitch saw a 2% jump after raising its annual guidance with confidence in the upcoming holiday shopping season. So one side is like, well, we're not sure if we're going to do well. The other side's like, yeah, we're doing great. There's my thumbs up. All right, and to close it out, oil prices retreated, relinquishing recent gains as traders exercised caution ahead of the OPEC Plus meeting over the weekend. Weekly U.S. inventory reports from the American Petroleum Institute and the Energy Information Administration are expected on Tuesday and Wednesday. All right, so it's kind of a meh kind of a day. All right, let's dive into some other data. U.S. existing home sales slump to more than a 13-year low as prices accelerate. In October, existing home sales in the United States hit their lowest level in over 13 years, with the highest mortgage rates in 2 decades and a shortage of houses deterring buyers. The National Association of Realtors report revealed a 4.1% drop in sales to a seasonally adjusted annual rate of 3.79 million units, the lowest since August of 2010. This decline, attributed to a combination of high prices, elevated mortgage rates, and homeowners unwilling to move, may result in 2023 being the worst year for home resales since 1992. Hey, that's when I graduated high school. I even had hair back then. It was still receding, but I had hair. All right. The median house price for October reached a record high, reflecting the challenging conditions buyers face. The ongoing trend of high prices, a scarce supply, and millions of homeowners unwilling to move is considered a freeze on the market. Factors such as rising mortgage rates, currently averaging 7.44%, have contributed to the challenging environment. Existing home sales, vital to the U.S. housing market, also experienced a 14.6% year on year decline in October. The Fed's aggressive monetary policy tightening has impacted the housing market, leading to residential investment contracting for 9 consecutive quarters before a slight rebound in the third quarter. The lack of supply is evident with only 1.15 million previously owned homes available in October, a 5.7% decrease from a year ago. To address this, the National Association of Realtors plans to discuss potential government tax incentives to encourage longtime homeowners to sell. Despite concerns about affordability and supply constraints, the median existing house price rose by 3.4% year on year to 391,800. What is the National Association of Realtors going to do? Bribe Congress to give more tax breaks so that people will sell their properties? I guess that's how it works in Washington, but I don't see how that really helps the situation. And finishing up, however, there is optimism in the industry as realtors are pushing for government intervention to stimulate the market and to address challenges. Yeah, because remember the government intervention 3 summers ago that created all this inflation? Do we really want add more of that into the housing? Granted, this is a result. The housing situation is a result of all that inflation. But do you really want them helping you out anymore? I don't. The impact of these efforts, combined with potential changes in mortgage rates, will likely influence the housing market's trajectory in the coming months. Interesting. All right, got one last article here. It has nothing to do with finances, but does have to do with your wellness, your health wellness. It's from the Mises Wire. It's titled "America the Obese: How Taxpayers Are Forced to Run Their Health." So let's see what he has to say here, because it's not all just about money. Because you could have a lot of money and be in terrible health, and retirement is pretty unpleasant if you're not able to enjoy it. All right, the U.S. government agriculture policies spanning over 2 centuries have unintentionally contributed to the current obesity epidemic and its associated health and economic consequences. The root of these policies can be traced back to the Tariff Act of 1789, which imposed tariffs on imported sugar to generate revenue, but also provided significant protection to domestic sugar producers. That's called protectionism, people. In the late 1960s, the discovery of an enzyme in Japan facilitated the conversion of cornstarch into fructose, leading to the approval of high fructose corn syrup. That's good stuff. By the FDA in 1983. The widespread adoption of high fructose corn syrup by the food industry resulted in a significant market disruption, as it offered cheaper alternatives to traditional sugar. To counteract this, the U.S. government, under Richard Nixon, implemented a policy promoting maximum production of corn and soy, incentivizing farmers to take on debt and leading to excessive production. As a consequence, the Farm Bill, periodically renewed every 5 years, began subsidizing corn farmers, and the increased supply of corn contributed to the affordability of sweeteners like high fructose corn syrup. The excessive consumption of fructose, especially in the form of added sugars, has been linked to obesity, with Americans currently consuming an average of 130 pounds of sugar per year. It's delicious. Good for your teeth, too. The obesity epidemic has far-reaching health implications, including increased risks of diabetes, heart disease, stroke, cancer, and mental health issues. Moreover, it places a substantial economic burden on both individuals and society. The annual medical costs associated with obesity were nearly $173 billion in 2019. I'm looking at you, fatties. Contributing to the strain on national budgets, particularly in the allocation for Medicare and Medicaid. Yeah, if you're a fat ass, you really shouldn't be on the government dole when it comes to healthcare. I don't want to take care of you. The article emphasizes the interconnectedness of historical agriculture policies and their enduring impact on public health and economic outcomes. The upcoming renewal of the Farm Bill is presented as an opportunity for the government to reassess its agricultural subsidies and address unintended consequences, offering potential benefits for both health and fiscal responsibility. Do you actually think that the government is going to do anything where they are going to take away handouts, which are usually just bribes for votes? Nah, I don't think it'll change. But we can hope. The libertarian in this can hope for the reduced government and fiscal responsibility. I know, it makes me laugh. I can't even say it with a straight face. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.